Howdy, Jacob here. Today we're looking at Genesis Energy. So, quick view, I can see a massive amount of debt here, $1.4 billion market cap with a $5 billion enterprise value. Not liking that 5.18% dividend yield. That looks attractive, but business was 4.1 billion in 2013 and is now 2.8 billion in revenue. So down quite a bit, but I guess it is up a little bit since 2016. It's all over the place. Uh, really, no return on invested capital. Not really seeing anything there. Let's look at this debt. Okay, 851 million in 2012, 3.5 billion in 2022. I mean, I guess they were pretty much 3 billion in 2016, and they've kind of hovered around that. Let's see what their cash flow is. Nothing, 30 million, 150 million, 220 million. So their property and plant caught up with them. Capital expenditures caught up with them. Um, I guess we can average out 5 years to maybe 100. Let's be generous. Let's say $100 million. They can't afford that dividend. That dividend is going to be cut in half easy. Might as well put that in now. They can't afford that dividend with interest rates rising too, and with how much debt they have. I'm going to cut it into a third and assume that that's going to be about a 50 million payout. I think, given the volatility of their cash flow, their up years might make up for their down years, but it's going to be a business that's going to have to start realizing that they can't just issue debt to fund everything. And also, they've been issuing a bunch of shares. Looks like 22 was interesting. They bought back quite a bit um, through debt. All right, they went into debt to buy back shares and pay their dividend because they made no free cash flow. So not a crazy sexy business, and in fact, it's might be a little bit on the uglier side. Um, Benefit of the doubt, I'll say 0% revenue growth, 10 on the P, price to free cash flow. If they don't grow, they don't deserve a premium or anything. Um, Margins are going to be wildly guessing. Let's do 2.5 and 4. Share change 0%. Yeah, this is going to be a company I'm going to be waiting on for a little bit, I presume. Have to drop 67% for me to get to looking at it. Right now, enterprise value so much greater than their market cap isn't very attractive, and the last 2 years haven't produced, um, or rolling 12, and last year didn't produce positive free cash flow. So I'm wondering if this is going to stick or whether they're going to, improve. But it does look like there was an interesting period between 2017 and 2020 where their capital expenditures were lower. Otherwise, their cash from operations have been very steady. So it's just whether these capital expenditures will hold as high as they are, or whether they'll go back down to what we were seeing between 2017 and 2020. But again, as for now, 67% off from a price that get us to a 50% return. With these assumptions, I'm just waiting. So I hope everyone enjoyed the video and has a good rest of your day.